All right, back to work. Here we go again. Final week of the month of November. Hope you guys had a fantastic Thanksgiving. Hope you had a great weekend. It's back to work tonight, though. We got some money to make to finish up the month of November. Got a bunch of ranges on the charts right now. You know me, I love range-bound marks. Got a bunch of great trades I'm tracking for tomorrow. And as always, I'm going to cover my favorite trades in the video tonight. That way you guys have a game plan to make some money on Tuesday. Now, before we jump in and get the video going tonight, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor here tonight, will you? Hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Either way, thank you so much for tuning in, supporting the channel. But enough of the intro, though. Right, couple days off last week for Thanksgiving. It's good to be back here in the rhythm here this week with you. Now, starting off tonight on the 60-minute time frames, I get the Nasdaq and the triple Qs. I get the Emini and the SPY. I like to use the 60-minute time frames to plan my trades for the following day. And then later on in the video tonight, I'm going to drill down to some tick charts. I like to use tick charts for entry timing. Those are much better for the entry. So we'll start off tonight on the big picture, on the 60-minute, and then we'll drill down and we'll talk entry tactics a bit later on in the video. I want to make sure you guys know exactly the time, the perfect entries to make some money on Tuesday. Now, what are the 60-minute time frames telling us right now? Well, you'll notice we're pretty bullish overall, right? I like to use the 60-minute chart to help me filter my trades for the following day. So we definitely have a bullish overall directional bias. You can see right away that we're sitting right on the low of that bull channel on the E-mini, coming off the low of that bull channel on the Nasdaq. So it looks like we might have a good spot here for a run going higher. But you know, I think the really most important clues to kind of tell us where the best entries are, I think are on the tick charts here tonight. We'll drill down to the tick charts here and talk entries because I think the big clues are on the tick charts, but definitely bullish overall right now on the 60 minutes. Now, before we jump into those tick charts and talk about entry tactics for tomorrow, why don't we check the schedule for tomorrow real quick just to make sure everybody knows some key things I'm watching tomorrow in our trade room. The only real news we have tomorrow that we care about tomorrow will be that consumer confidence number at 10 o'clock Eastern time. We then have Goolsby speaking, Waller and Bowman speaking, Fed speakers at 10:05 and 10:45. So 10 o'clock is a very busy, important hour for us tomorrow morning in the morning trade room. Don't forget, tomorrow morning, 8 o'clock Eastern time, we get together and trade the game plan we talk about tonight. I'll put the details, the description of the YouTube video. We don't have a lot of other big news until we hit Wednesday, Thursday. GDP, personal income is arguably the biggest news of the week on Thursday. We got J-Powell, we got ISM manufacturing on Friday. So we have a lot more news coming later on this week. But tomorrow, though, it looks like 10 a.m. is the time you'll be paying attention tomorrow with us in the morning trade room. Now, back to our charts, though. It's important to know when the news is, but you know, the money is made on the charts. Why don't we now go over my favorite trades here for tomorrow? Let's drill down to those tick charts, talk entry tactics. We'll start tonight first here on the E-mini and the SPY, and of course we'll wrap things up in the Nasdaq and the triple Qs. Keep in mind the E-mini and the Nasdaq are almost identical right now, so everything is very much interchangeable here on all of these markets. As I mentioned in the introduction, we have a bullish bias overall right now on the 60-minute chart, and we're sitting right here on what is pretty obviously some pretty significant support here off the low of that channel. We're stuck inside of a range though right now, and I think that's where the biggest clue is going to be for us to make some money on Tuesday. Drill down to our tick charts. We use tick charts for entry tactics or entry timing in our trade room. This is a 7,000 tick chart. You'll notice linked up there in the upper right-hand corner. And this is the 21 EMA. That's the 21 EMA in case you're watching here tonight for the first time. The tick charts really give us two important clues. One clue is the strength of that move we saw last Wednesday morning, right after that big pullback off last Monday's big push higher. Anytime, and we talk a lot about this in our free video classes, right? anytime we see a really strong move in one direction, it's almost like a bullseye. We're waiting for a nice deep pullback and a retest of that high. Look back here, right? Anytime you see a nice strong move in a trending market, we usually get a two-legged pullback and a retest of that high. So you have to think right away, the buyers have one thing on their mind right now. They want to punch out that 45.80 half high. A very similar level is also on the Nasdaq. The second clue is this range. There's kind of a couple of ranges here right now on the chart. There's a range right there. There's a range right there. Think of this whole area as one big magnet. Okay, ranges, you know me, I love ranges. Ranges act like magnets, and ranges love to rotate back and forth and back and forth. So when you think about how ranges work, ranges are magnets and they balance. I have a bullish overall bias right now, and we know that ranges love to rotate. It's very easy to see that buying below that trading range is going to be probably the easiest way to make consistent money until something changes tomorrow. That will certainly be one of the scenarios I'm looking for entries tomorrow. Possibly some bear traps right down below those lows. If you understand the directional bias is bullish, the range is a magnet. We know the market wants to go, and so definitely buying underneath that range is one scenario I have on my radar for tomorrow. Another very common scenario whenever we have a bull market into a trading range is a breakout pullback. We may see it break out, and to avoid buying high, we wait to buy a breakout pullback. Now, there's a couple variations of breakout pullback, so we'll talk about different variations here tonight. That way you guys have a game plan to make money no matter what the market throws at us. That is the second scenario we'll talk about tonight. A couple ways we can buy a breakout pullback. And the third scenario is really kind of the opposite of the bear trap. It's a bull trap, right? We may go up, we may take out that high, right? We may simply collapse right back down into that trading range. Again, if we understand where the market wants to go and we understand that ranges act like magnets, it makes perfect sense there could be some sellers up there and potentially some reversals for us to profit on the way back down into that trading range. So as you can see, we have plenty of ways to make some money tomorrow. I'm going to start first right now on the bear trap. There are 3 different variations of that I want to make sure you are aware of. But as we go deeper into the video, we'll talk about breakout pullbacks. We'll talk about head fakes off the highs and fake out breakouts, reversals off the highs as well. So let's dive into it. As the market goes lower, right? My favorite trade for tomorrow would be a bear trap, right? Underneath that low. Now, there are a lot of different kind of entry tactics we talk about in our free video classes. One of them is called a failure pattern. So it's very simple. I want to be a buyer underneath that low, but I don't know exactly how far that move will go. So I'm not a very big fan of picking the bottom on these. What I'd rather do is wait for a breakdown, get into some of these key areas of support below, and then let's see if we can get some sellers. We assume these are rookie sellers trying to short this thing on the pullback. Once I see those bears try twice, we call this the 2-try rule in our trade room, then we know all the bears, their stops are sitting right there, and we can buy right into those stop losses with a very simple pattern I call a failure pattern. This would be a 2-try failure, 1 and 2. And again, I'm simply waiting for a pullback. The range is a magnet. We know we're bullish overall. All I'm going to do here now is sort of rope in some of those bears, use those stops to fuel the move going higher. Now, there's a lot of variations of this. For example, sometimes we'll get a real strong breakdown. Sometimes I'll get that 1, 2, I'll get that failure back up, but sometimes that move down is so strong, it'll hold the underbelly of that range and come back down to take out that low. At that point, we've already got our 1-to-1 target, and we're trailing our stop at that point in most cases. But they come back and retest the low now. These are fine. These are called double bottom retests. Double bottom retests are very, very common in range markets, and it's basically the same game plan. Once they go back and retest that low, even a bit below that low, I look once again for that bears once, bears twice, and use that failure pattern going back higher. So think about failure patterns as we roll back around that low. Now, every once in a while, there's so many buyers down here, we wind up getting a V bottom off the low. Sometimes we get something like this where it pops up and starts grinding back up into that trading range. Whatever you do in these real sharp V bottoms like this, you don't want to chase it as we're going higher. What I always do is I go out, I look left, I draw a trend line off the highs, I bring that trend line down off that low, it creates a bull channel, right? Then look left, find some prior swings, and my favorite entry is always a kind of a trap entry, a bear trap underneath one of these prior swings. Now, I'm keeping things pretty simple right now. This could be any of the entry patterns you guys are learning in our free video course. It could be a bear trap, like I'm showing you right here. It could be a seller failure off the moving average, a failure into pullback combination. Now, if you're watching for the first time right now, you might have no idea what I'm talking about, right? Failures, bear traps, pullback combinations. I know that most of you guys have already taken my free video classes. You know the entry tactics I'm talking about. But if you're watching for the first time right now, I teach all of these setups and a whole lot more in my free video classes. What I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link and take that free video course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our morning trade room to know exactly where the best winning trades are going to be each day. Most importantly, though, I'll teach you my 4 favorite entry patterns to help kickstart you making money. If you're not making consistent money right now, if you're missing too many good trades, if you're still trying to qualify for one of those funded accounts at Apex or Top Step, definitely take that free course. It's perfect for someone trying to make the jump into full-time trading. I have hundreds of examples of all the entry tactics I'm talking about, the easiest way to learn them and start making money with it. Also be aware too, if you can't grab that link up top there in the upper right-hand corner, I'll put all the important links you guys need, the description of the YouTube video, the free video course links to get started there, the membership links to our trade room. And also too, I post a lot on Twitter during the day. I'll put my Twitter feed down there in case you guys are hanging on Twitter and you want some updates between these videos every evening. So now you know where to learn more about all the entry tactics I'm talking about in the video. And also, too, you know now, if we do run lower, it's that 1, 2, back up. Again, if they roll back to that low, same thing, 1, 2, and back up. And again, very, very important, if they really V bottom off of that low, just don't chase after it, right? I don't want to be buying up here. Okay, I'm not trying to buy up there, right? I want to buy as low as I can. This is where there's always some nuance you're going to be aware of when it comes to trading. If we V bottom off that low, go find that new channel. Mark off that, right? Mark off that high, off that low, and grab that first test. It'll almost always be a trap below that prior low there. The goal is to buy right underneath that trading range. All right, now we know how to make money on this thing if it goes lower with a bear trap going lower. How do we buy now a breakout pullback? Okay, that's the second scenario, is to buy a breakout pullback. There are 3 different types of breakouts I want you guys to be aware of. And then, of course, we'll finish up tonight. How do we trade a fake out breakout? Right? A fake out breakout. That is it's a lot easier said than done because we're so bullish overall right now. Why don't we take a look at those scenarios now over on the Nasdaq? The Nasdaq is virtually identical to the S&P. We're bullish overall on the 60-minute. That will give us our directional filter here until things change. We're sitting, of course, at support at the low of this bull channel. Great spot to be a buyer, but let's take a look first of all, though, Before we do anything here tonight on the tick chart, this of course is a 4,000 tick chart linked up in the upper right-hand corner. And again, the 21 EMA is on the chart in front of you. There are really, for the most part, this is a little bit messier of a chart than the S&P right now, but we're very similar. We have a very strong run higher, right? Again, anytime we see a strong move in a trending market, we expect that deep pullback and that retest of the high. Again, a very strong move going higher. We know where the buyers are trying to get to. They're trying to punch out a retest off that high. And then, of course, you have one of the most important clues, which, of course, is this range. Now, it looks like right now, we're now underneath that trading range. And again, if you understand that ranges love to rotate, the amount we go below the range can then project it above that range. And it looks like right now these buyers are trying to complete, we call, rotation off the low of that range, punch out that high at 173.5 level. The only real kind of wrinkle in this is the range that we saw here this morning. Market pretty much opened up, chopped around for a little bit, and now we're trying to hold and keep going. We may end up seeing a pendulum swing off the high of that range. And you know who's waiting down there? Absolutely, right? Buyers down there. Because again, strong run up. The bullseye is back to retest the high. The range, of course, right in the middle. So very similar overall game plan on the S&P and the Nasdaq here right now. Run lower, trap those bears in, keep using stops to fuel that move higher. And look right here too, by the way. Look right here. I want to point this out too. Look at this area right there, right? See what happened here? That's one of those V bottoms I was talking about, right? A lot of times what happens is they'll run lower, they'll immediately bounce back up, right? They kind of bounce back up and they start grinding, going higher. Mark that high like that, bring that low, right? And go out and grab that first test off of that low. So kind of a good example of what I was trying to illustrate before for you on the 60 minutes. So game plan, I think, is pretty straightforward, going lower. As we go higher, all right, as we go higher, there are a lot of ways in which we can trade this. We know where the market wants to go, right? On the S&P and Nasdaq, it wants to go back out and take those highs. If the market begins to really race towards those highs, there's one type of entry pattern to look for on the way higher. It's called a bear trap, right? So if we do start running higher here, I want you to keep an eye out for this pattern. It's a strong move up. It's a shallow pullback. It's a higher high in price. It's a trap below that low, right? So what happens is sometimes the markets, because you know this little channel right here, who knows, right? We may open up and the buyers may make a sprint right up to that 173.5. The way you buy on the way up there, and we talk about this a lot in our free video classes, is I want to buy as low as I can, right? And the way you do that is with in this case, a bear trap. It's a higher high in price, and that trap, right? That nice strong signal candle coming off that trap low. We talk about signal candles, of course, entry tactics in the free video course, right? That's your entry pattern on the way up to that retest of the high. Now, later on in the video, I'm going to talk about how to short this thing back down again, right? I'm almost there. But first, though, there are two basic types of breakouts I want to look for. One is a breakout pullback, right? One is a breakout pullback. The other is we call a pop and grind breakout, all right? So breakout pullbacks are pretty simple. We know where that range is, right? We know where that range is. The levels of resistance above that range can be used as support. So, for example, let's go out and I'll put this right. You're going to flip that now into a green area. I want to look for that strong run up, right? And that pullback off somewhere, usually it's somewhere right around those highs that barely poke their head out above that trading range. Now, how do you do that? Well, my favorite way to do this is to wait for that breakout, start to go out and get that moving average coming up. And what I'll do is I'll keep my eyes on those prior highs and try to get underneath that 21 EMA. Now, in most cases, there'll be some sort of channel we can draw. I'll be drawing that channel off these recent highs. I always draw bull channels off the highs first. Then I bring those channels down off of that low. And this is usually where the magic happens, right? When we have a channel, right, lined up along with that kind of the top, right, of that range, right? Again, it's a breakout pullback of that range high. Now, how do you time the entry on this? In my experience, most of these are going to be what we call seller failure patterns or failure setups we teach in our free video classes. So we have a strong run higher, right? That breakout. We know strong runs are going to want to retest that high. We've talked about that a couple times already. Now, the ideal scenario is we slice underneath the moving average. The bears come in. They try to short that move back down into that trading range. Once those bears get short, now we have them pinned, right? Now we know exactly where their stops are. Now we know exactly where their pain is. My first mentor in trading would always say, find the right direction, right? Go with momentum, but look for traders who get stuck in a painful position, in a losing position, and literally buy right into those stop losses. This is a great spot here for what I call a failure into pullback combination. All right. I mentioned earlier failures, pullbacks, right? Part of our price action cycle. You guys learned that in the free video course, right? So this should be nothing new to you if you're taking my free video classes right now. So a failure pattern below the moving average, then that pullback pattern, right, that comes after. Now, where are targets on this? The targets on this on the breakout pullback are really simple. One is to go back and retest that high, right? We always know whenever we see a strong move in one direction, we expect a pullback and a retest of the high. So what I always do is I always take a half off, right, at that high, right? Half the position comes off at that high. And then whenever we have a range, the breakout leg is the measuring leg. Now, I don't have enough of a crystal ball to know exactly how big that breakout leg will be right now, but once we know how big that breakout leg is, then we can anchor it off that low, and that will tell us now where that final target, that final half will come off on that target, right? Makes sense? So again, if I see that strong breakout going higher, that breakout leg is a measuring leg. Okay, I take the size of that leg. Once I know how deep the market pulls back, right? We don't know yet. But once we know how deep the market pulls back, then we can pin that breakout leg onto that low, and that will now project for us, right, how big that second target, that runner target, will be going overhead. We're always talking about this in our trade room. If you want to make more money, don't trade more often. Don't trade more setups. Trade the same favorite markets, favorite setups. Just get better at holding on to your winners and squeezing out more profit on your already successful winning trades. This is a great example of how to use a breakout leg as a measured move leg to know how far that trade may go. That's called a breakout pullback off range highs, right? So up, pull back and go, breakout leg, measuring leg. That will give you more details on that. We'll know more tomorrow. The other one here is the pop and grind. Okay, every once in a while, well, I should say that quite often, we'll get a run back up. But instead of that fake out, breakout back in, which we'll talk about here next in a moment, the market simply keeps on going and begins to grind and grind and grind. You will quickly learn to love these pop and grind movements you see on really any market, any chart, any time frame, because once we get that pop up and they start grinding, now we pretty much know where the best entry is going to be. I'm going to mark a trend line off those highs. I'm going to bring it down to that low. We've talked about this technique before, right? If it goes lower and pops back up, this is the same exact technique I like to use. I call these kind of V bottoms, right? V bottom reversals in that example, right? It's the same idea though, right? So if we end up rolling higher here, right, into a pop and grind, what do? We draw that channel off the highs, we go out, we find our entry, right, off of that low. Now, remember, this could be any of the entry patterns. I'm keeping it simple in these videos, but inside the free video classes, you guys will learn the entry tactics in a lot more detail. This could be a trap entry, like I'm showing you right here. here. It could be underneath the moving average. Bears come in, try to get short. That's a failure entry. Failures into pullback combinations. Again, if you take my free video class, this should all ring a bell for you here. Again, that breakout leg, that's the one kind of difference about a pop and grind, is that pop leg, right? That strong pop leg. That's the breakout leg. Once we know how big the breakout leg is, then we can pin it down, mark off that low, and that will tell us now where that final objective is going to be. Again, I'll take half off at the top of that range up there, and then again, we'll use a size of that breakout leg, right, to project how far that big target may be coming off of that high. All right, guys? So now we have a pretty good idea now how to buy as it goes lower, right? How to buy one of two different types of breakouts. And again, traps on the way higher. Final one here is, how do we trade a reversal, right? The third scenario right now, which remember, will go against the directional bias. We're bullish overall. So if I want to be a bear up here, if I want to sell up here, okay, I need to respect the momentum of the buyers, right? The buyers have all of the momentum right now, not just on the tick chart, but also too on the 60-minute. Okay, the hourly chart, the 60-minute chart is a great job at giving us a filter, right, to where the best moves are going to be this week. If I run higher here, okay, if I run higher here, where's the objective? The objective is to take out these highs. Okay, if I want to short back down into that trading range, I need to trap the buyers in up here and ultimately use their stops to fuel the move back into that trading range. And to do this, there's one entry pattern we use. It's called a crown reversal. Now, we talked a lot about a failure pattern earlier. This is very similar. It's let's trap the buyers in. Get the buyers trying once, get the buyers trying twice, and the one difference between a failure pattern and a crown reversal is a crown reversal requires lower low in price and a trap above that high, right? As opposed to, say, for example, a run up, buyers once, buyers twice, and simply using what I would call a failure pattern to sell back down. You can try to use a failure pattern, but when I'm going against the overall directional bias, the problem is that if we go up and we go 1, 2, and then sell right here, we oftentimes are running into that breakout pullback, and you're walking into a bear trap. Right? Again, we're not a bear market. We're a bull market overall. So the idea of going up and getting buyers once, buyers twice, and then selling into stops, that idea works much better going with momentum, right? Bears once, bears twice. I can be a lot more aggressive, right? Buying a failure below support in a bull market. I can't do that same thing when I'm going against that overall direction. Does that make sense? I hope it does, right? Because momentum is one of the most important variables that will keep you out of losses, if you understand, and put you in the best winning trades. So as we're going higher here, again, I'm going to wait and see if we keep on going, right? Grind, going higher. I'm not going to try to pick that top up there. But if we do start seeing these buyers, right, if they come in and they try once and they go lower, they try twice, and we get that beautiful, again, remember, it's lower low in price and that trap, nice strong signal. That is the good stuff. Again, we call these crown reversals off the high, because now, right now, if we end up holding off that breakout pullback now, I've already got my 1-to-1 already locked up, right? I'm already in the green big time on that trade. If it ends up ripping going higher, right? I'm still okay because I got in at a much higher price. Okay, that's why crown reversals, that's why bull traps are so important whenever you're trying to kind of pick the top or short resistance in a bull market. All right, guys, hopefully that makes sense tonight. Don't forget, tomorrow morning, though, we're going to do all of this together. We prep the charts, review the game plan tonight, but tomorrow morning, 8 o'clock Eastern time, I can't think of any better way to learn this stuff than to come out and watch me do it tomorrow. Trade along with me. Ask a bunch of questions. I have the entire system ready for you tomorrow, and we'll do it together at 8 o'clock Eastern time. What I'll do is I'll put all the important links tonight. I'll put the free class links. I would definitely recommend start there first. Learn the basic strategy. Start making money with it. Get more comfortable with it. That will be ready sometime soon to come out and trade with us in the morning trade room. But I'll put the free class links. I'll put the trade room membership links. I'll put the Twitter feed stuff down in the description of the YouTube video. So grab those links, and I'll see you on the inside of the free video course. And hopefully I'll see you sometime soon. Trade with me sometime in the morning trade room. Questions, any issues getting access to the free video classes, you can always call the office, send an email, use live chat. If you guys have questions, if you're having trouble getting access to our video classes, do not be a stranger. We're always here to help out. So definitely keep in touch if you guys have any issues getting registered. In the meantime, though, great start to the week. Had a fantastic morning this morning in our members trade room. We got another big day coming tomorrow, 8 o'clock Eastern time. Hopefully I'll see you sometime soon in the morning trade room. In the meantime, though, we'll see you guys same time, same place tomorrow night. In the meantime, be well, be nice to each other out there. Have a fantastic evening, and we'll see you guys next time. Adios, amigos. Bye-bye for now.